Welcome back to Intrendias. Today we're seeing Bank of America expanding into 4 U.S. states to compete against JP Morgan, and these states are Nebraska, Wisconsin, Alabama, and Louisiana. So this is obviously good news for Bank of America shareholders since they're closing the gap between the competition with JP Morgan. And with physical locations and brand recognition, perhaps we can see increases in their deposits slash loan originations. Simultaneously, we're seeing the U.S. consumer confidence raise to 17-month highs, and the housing market is regaining strength, where we're seeing home sales surge 12% and monthly house prices increase. The consumer confidence index increases to 109 compared to 102 in June. So what does this mean? Take Bank of America and take the consumer confidence index together, and what do you get? You get Bank of America making more off their credit cards. Every time someone swipes, Bank of America gets a little cut out of that. If consumers are confident that the US is, well, they're only going to go into a mild recession or not a recession at all, they're most likely going to spend more. So Bank of America wins there. Not only that, if consumers are more confident, they will most likely originate loans more, right? They're saying, hey, I'm confident in the market. I might as well buy this car now before it gets even more expensive. I might as well buy this house before it gets more expensive. In terms of insider buying slash selling, we're not seeing much activity based on Open Insider for BAC, Bank of America. We have seen selling for the most of 2021 and 2022, but these are really not that recent as we're here in June. So, what does the Intrendias website, MIA terminal, have to say? The Intrendias website is free to use. Anyone can use it. We have a search assets tab that'll direct you to the MIA terminal. And here you could punch in crypto, stock, forex, indexes, whatever you'd like, and it'll spit it back out. So here we typed in BAC, and once we hit submit, we are presented with buy and sell signals along with popular technical analysis charts like the MACD line, William %R, and RSI. What we are seeing here is a very recent buy signal for June 26th. And we're seeing the MACD line could potentially have a reversal, and the MACD line could cross from beneath the signal, which would be good news. The William %R is below the oversold line, but just looking at that by itself is not really compelling. And then the RSI is quite healthy at 45, so pretty much in the middle. So just based on these 3 charts alone, not very significant. So why don't we go to the shorts percentage, and quite expected, we're not seeing very short, heavy activity in shorting. The traditional phrase of too big to fail is probably what's going on here. So we, as investors who may want to purchase BAC, Bank of America, will most likely not have to worry about shorting pressures in our positions. what are we seeing in the candlestick chart? Here, I'm actually seeing a symmetrical triangle where we are entering from above down to this higher lows line, followed by a lower highs line. And we are hitting the higher lows line 3 times now, and the higher, lower highs twice. So, what does this mean? The symmetrical triangle in and of itself is actually a neutral reading, so it doesn't necessarily yell out bullish or bearish. However, with how banking has decreased so much here in 2023, where Bank of America used to be all the way up here hitting $50 a share, and here we're all the way back down to 28 a share. With the consumer confidence increasing here in June, and we're also seeing Bank of America expand into new markets physically with branches into 4 new states in the US. This symmetrical triangle could turn out to be a bullish outcome, and we may see the stock go all the way to $34. The first bullish scenario line is at 29 and 42 cent. This is drawn based on the lower highs line. We could go a step further and it may hit the $29.87 line. And then the very best case scenario is the $34.47 line, which is also drawn based on the lower highs line. The most bearish scenario is actually not $23, but actually $19. This is based on the COVID lows, the lowest of the lows of COVID in 2021. I highly doubt that it'll go to 19. Simultaneously, though, this is not financial advice. This is just for me to share you what I'm seeing. If this neutral reading of a symmetrical triangle is indeed a bearish reading, in hindsight, we may see Bank of America go down to $23.17 based on the COVID lows support 1 line, which is based on these readings here, as the stock has bounced off this line 3 times back in 2020 and late 2020. So, with that being said, the consumer is very confident in the market, which will lead to increased usage in credit cards, increased usage in loan originations for mortgages and cars and stuff like that, which will very much benefit Bank of America. And Bank of America is in a position where they're so confident enough to place capital, right, to construct these new branches, hire employees to man these branches. Either they're purchasing this property or renting it. They're clearly inputting a lot of capital into opening branches in 4 new states. This must mean that Bank of America is confident in their position to make these branches profitable and compete with JP Morgan. So if that's the case, this symmetric triangle may just be a bullish reading. I hope you enjoy what you see in this video today. If you did, make sure to like and comment. I would love to hear your comments down below. And if there's anything I missed based according to Bank of America, let me know, and I would love to hear it down below. Make sure to subscribe to hear more technical analysis coverage on other stocks that you would not want to miss. Thanks again for watching. I'll see you in the next one.